Guess you've been looking for ideas to raise capital for a business. One of the most difficult tasks for new and intending entrepreneurs is accessing funds for starting up their small businesses. In this case, raising a capital is not an easy task. It actually requires a lot of consistency, patience, and determination. However, before venturing into it, you need to prepare an effective business plan that you will likely present to your investors. A business plan is a document that outlines the description of a business, the objective, cost, expenses, the business goal, and everything concerning your intended business. While money doesn't grow on trees, there are a number of ways you can seek funding for your business. So this brings us to today's topic: Top 7 Uncommon Ways to Raise Capital for Your Business. But before we continue, make sure to subscribe to our channel and click on the notification button. Number 7. Venture capitalists. They typically want to invest in slightly more mature companies than angel investors, and sometimes want to have more of a say in managing the day-to-day operations. Of all the financing options on this list, venture capital tends to place the largest bets, typically more than $1 million at a time. For that reason, venture capitalists tend to be highly selective about their investments, and they prioritize businesses they think are likely to generate huge returns and result in successful IPOs. Most businesses that receive venture capitalist funding already have a solid, revenue-generating business that they're hoping to expand. You could apply for an investment with a venture capitalist firm. It's not the easiest thing to accomplish, but plenty of small businesses have done it successfully. Number 6. Angel investors are individual investors who are looking to invest their own funds in new businesses, typically in exchange for equity. Angel investors tend to be successful business people themselves. Generally speaking, angel investors are about more than just a decent slab of cash to help with your business. They'll even mentor you throughout your adventure, offering advice when you need it, and warning you against common mistakes they've seen being made time and again by small businesses. Different angel investors want different levels of involvement in the businesses they invest in, so you want to make sure you found someone who believes in your business and whom you feel comfortable involving in decision-makings. Number 5. Selling of assets. Your assets are properties or belongings that have value. And these assets are a good source of capital, because you can either use this as a collateral when applying for a loan, or it could be sold to realize the capital you will need to start up your business. Some of your assets which are not being fully utilized can be put up for sale in a bid to raise money to start a business. Assets such as buildings, machinery, landed properties can be converted for cash or loan for business capital requirements. This might sound like a tough step to take, but it can help you meet your short-term fund requirements. Once you overcome the crisis situation, you can again buy back the assets. Number 4. Business grant and loan. Government institutions and international organizations are regularly setting up several grants and loans to support small and medium-scale businesses. Perhaps the quickest and most straightforward way to raise seed capital is through the government-backed startup loan scheme. And this is largely due to the fact that small businesses generate a lot of employment, improve local technology, and generally enhance the development of the economy. Hence, there are tons of grant and loan offers open to smart and intending entrepreneurs. You would then be expected to repay the loan at a rate of 6% per year over a maximum of 5 years, which is a decent deal as far as business loans go. Number 3. Crowdfunding. Crowdfunding for new business ideas is extremely popular nowadays, and it's a pretty effective way to make cash, provided you have an interesting idea that will capture public interest. Over the last decade or so, crowdfunding sites like Kickstarter have become a popular and viable source of capital for many small businesses. Unlike most of the other options on this list, most crowdfunding sites are geared more toward funding individual projects. Having a solid profile on these websites for your business is crucial. After all, this is all your potential investors will be judging your business on, so make it worth it. Number 2. Self-funding. If you're really serious about getting your business up and running, you should be trying to put aside some cash to help fund it if you can. We'd recommend setting up a student savings account with the sole financial goal of backing your business idea. Deposit any spare cash that comes your way into this account and leave it to grow with interest. Self-funding can be an effective way to start a small business, especially for first-time entrepreneurs who have trouble finding other sources of capital. Investing some of your own money will usually make investors and lenders more willing to partner with you down the line.
Number 1.
Asking friends and family. Raising capital through friends and family is a viable option for many. According to the Global Entrepreneurship Monitor, 5% of adults have invested in a company started by someone they know. It is quite easier to start a business with this kind of fund alternative. To raise the capital you need to start up business, your family and friends should be part of the people you reach out to. And if you're credit-worthy, your family and friends wouldn't hesitate to help you out with the cash that you need. One of the good things about the source of capital is the fact that you wouldn't have to pay back, and in cases where you're meant to pay back, you may not be required to pay interest, as the condition for the repayment is usually flexible and less troublesome. So, if you liked our video, please do well to subscribe to our channel and click on the notification button.